Taxpayers, have you heard about the Augusta Rule? If so, are you using it to your advantage yet? If you answer no to either of these questions, then don't worry. In today's video, I'm going to teach you everything that you need to know about the Augusta Rule. I'm going to explain everything you want to know about the Augusta Rule and how you can use it to save money on your taxes in the year of 2023. Also, make sure you stay all the way to the end of this video because I will be giving you one piece of information about the Augusta Rule that will help you make sure that you're using this strategy in compliance with the IRS. Without further ado, let's dive into this video. All right, guys, we have to open the video with what is the Augusta Rule. I need you to understand what this strategy really entails. You see, the Augusta Rule is known as Section 280A of the tax code, and it's really a special rule. It's a special rule that allows a homeowner in the United States to rent out their home for up to 14 days per year without having to report the rental income on their individual tax returns. So, in other words, with the Augusta Rule, if you have extra space in your home or just a home in general, you can rent it up to 14 days or 2 weeks without paying any taxes on the rental income that you make by doing this strategy. Now, you might be wondering, why was this rule created? This rule was created because every year, hundreds of thousands of golf fans would descend on Augusta, Georgia to attend the annual Masters golf tournament. There were never enough hotels, there were never enough motels to go around, and so citizens of Augusta started renting out their homes to golf fans to make a healthy profit during the tournament that was conducted every single year. Eventually, after strong encouragement from the people of Augusta, the Augusta Rule was created by the IRS in order to let people make money from these short-term rentals tax-free. You see, many people in Augusta and in other popular golf towns still take advantage of this rule to this day, even though the rule has been around for many of years. And because there is such a strong demand for short-term housing in Augusta for 1 or 2 weeks per year, homeowners in Augusta can make thousands or even tens of thousands of dollars renting out their home, and they don't have to pay any taxes on this money. Here's how homeowners in any part of the country can take advantage of this rule. The IRS allows the Augusta Rule to exist because renting your home out for 1 to 2 weeks does not count as full-time business income. However, being able to rent out your home or a part of your home for a very short period of time can help to fill the gaps in the short-term rental market. So essentially, the IRS lets people get away with not paying taxes on income they collect for rentals that are 14 days or less because it helps the economy and because it's only a small portion of income. If the IRS closed the Augusta Rule, then many people would probably stop renting out their homes for 1 to 2 weeks at a time because they wouldn't be able to deal with the added tax burden. So the IRS leaves this rule open, at least for now. So is the Augusta Rule a true tax loophole? Many people do consider the Augusta Rule to be a tax loophole. There are 2 reasons for this. The first is because it is a way to make money without paying taxes, and the second is because many people actually use the Augusta Rule to benefit in an entirely different way. In fact, many people use the Augusta Rule for their actual businesses in order to get a sneaky tax deduction and to shift some taxable business income to non-taxable personal income. Now, you too can use the Augusta Rule for your business by renting your house to your business for things such as meetings, masterminds, workshops, tax and accounting meetings, etc., and the list goes on. When this transaction occurs, you receive non-taxable rental income and your business gets the tax deduction at the exact same time. So you can technically benefit twice. Many savvy business owners take advantage of the Augusta Rule every single year by renting out their homes to their businesses on their tax returns. Now, here's what I want you to understand as it pertains to the rules and considerations for taking this write-off. At this point, you might be thinking, Karlton, this is freaking awesome. The IRS is really trying to help me out. I mean, guys, after all, the IRS is bill collectors. Would they really be trying to help you out? Let's talk about this. The IRS is usually very strict when it comes to anything that they're giving us for a benefit. So why would they be so lenient with the Augusta Rule? Well, there are a few things that you need to know about the Augusta Rule that might make it see a little bit differently than what you might think. Here are some of the rules or considerations with the Augusta Rule that you may not be aware of. The rent you charge has to be considered what's called fair market value. This is a new concept when I'm talking to taxpayers. What I mean by this, for example, if 1 day's worth of rent goes for about $1,000 on the open market. And if you're charging $15,000, then this can be a red flag for the IRS. The IRS believes that you are charging too much for rent, then it could cancel your eligibility for the Augusta Rule and force you to pay taxes on the income that you tried to take in an advantage to yourself. You cannot use the Augusta Rule to claim business deductions if you are a sole proprietor or a single member LLC. If you want to take the advantage of the Augusta Rule from a business perspective, you will need to have a business that is classified as a multi-member LLC, a partnership, or an S corporation, or of course, a C corporation. Now, your business has to be legitimate. And when you rent out your space to your business, it needs to be a legitimate business reason. Some people try to make up fake businesses that they start just so they can take advantage of the Augusta Rule tax strategy. You cannot do this. And if the IRS catches you, you could be in serious trouble. I just want to make sure I say that. There must be a true business purpose that justifies renting your home. This means that you have to do something that is actually business related when you rent your home to your business. You can't just claim the deduction on your tax return just because you own a home. You must have held a business event, a business meeting, and this actually needs to be true, which means I would be documenting it if I were you. The IRS finds out that you tried to use the Augusta Rule without actually having a legitimate business purpose that justifies you renting out your home, and you could face fines and penalties on the amount that you took in the deduction that you shouldn't have. You could also be forced to pay taxes on the rental income and be disqualified for other deductions. Now, here's the thing I want you to understand about this rule, and I made it very clear from the start. It's a 14-day rule. You cannot exceed 14 days. If you try to rent out your home past the 14 days, then the Augusta Rule no longer applies. You're technically not even using it anymore. And the income that you are receiving now personally will be taxable rental income, which defeats the entire purpose of taking the Augusta Rule. The rental agreement, when you establish the rental agreement, it must be in writing. There needs to be proof of the rental agreement in writing between you and your business. Those are two different parties. This proof could be used for evidence that you actually did rent your home in the event the IRS ever decides to audit you. Now, what I want you to do is keep a copy of the rental agreement and make sure you send it over to me if I'm filing your tax return so I keep a copy for you and we don't lose it. Hopefully, you won't need to use it as evidence in an audit, but if you ever are in an audit, it would be nice to have the information safe and in a place where you can have it readily accessible. Now, the one thing I want to make sure I discuss is that the property cannot be used as a primary place of business. So if you're trying to do the Augusta Rule strategy, this can't be the only place where you have your business. There's not much you can do about this one, guys. If your property is your primary place of business, then you will not be able to capitalize on the Augusta Rule. I want to make sure I said that. Now that we're learning about all these different components to the Augusta Rule, who should actually use this strategy, right? Some people are thinking maybe this is for experienced business owners or business owners making a lot of money. For starters, you are an excellent candidate to use the Augusta Rule to generate tax-free rental income if you have extra space in your house or a house in general that you own. If you happen to live in a place and you're a business owner, you can utilize the Augusta Rule strategy to your advantage. People who were in Augusta, Georgia were using this strategy and they got increased tax savings for having tourists show up to their house and rent out their homes. So believe you me, you can do this exact same strategy too where you are. Perhaps where you live is near a beach that gets popular in the summer, or a state fair that only happens once a year, or a concert venue that has big concerts a few times per year. If you live in one of these places, then you're a fantastic candidate to use the Augusta Rule. If you're lucky enough to live in an area like this, then you might be able to generate more money than somebody that might be in an area where it's not being rented out for hundreds or thousands of dollars a night. You do not necessarily need to live near some sort of tourist attraction or golf course to rent out your home for 1 to 2 weeks to your business. What you do need to have is a direct business purpose. In fact, just about anyone can do it as long as you own a home and you do not use your home as a primary place of business. If you do live near some type of seasonal tourist attraction, then you might not be able to make quite as much money from your rental, but you still might be able to make a significant amount of money. And guys, let me tell you, the money is going to feel a whole lot sweeter if you will be able to keep all of it from going to Uncle Sam. So this is something we have to take into consideration on our tax returns, not just once, but every single year. Regarding businesses that can take advantage of the Augusta Rule, S-corps, partnerships, C-corps, and multi-member LLCs can all take advantage of the Augusta Rule, as I mentioned earlier, to get the tax deduction by transferring their business income to non-taxable personal income. I want to make sure I say that one more time. You're transferring business income to non-taxable personal income. That means that there's going to be a business expense on your profit and loss statements. And that means the money that's being transferred over to your personal account, a money transfer or a check, is non-taxable income. Just wanted to make sure that you guys knew that, okay? Just make sure that if you try to do this, that you follow all the rules and meet all of the criteria that I went over earlier in this video. Now, question I get all the time, Karlton, is the Augusta Rule going away? As of right now, the IRS has not stated any intentions to remove the Augusta Rule. However, in the last 4 to 6 years, major changes have been made to the US tax code. Some of these administrative changes have come from the Trump administration. Some of these administrative changes have come from the Biden administration. Some of the most notable tax changes were found in the Tax Cuts Jobs Act of 2017. And then the notable new changes were in the Inflation Reduction Act of 2022. Because the United States tax code is a living, breathing document that changes from time to time, guys, it is always good to capitalize on tax loopholes sooner rather than later. I say this all the time. And this is because you never know when loopholes might be closed or canceled. Use the Augusta Rule now before it is too late, at least for this year. Because if you've not already utilized the Augusta Rule to earn tax-free income or divert some of your business income to non-taxable personal income, then there is still time to do this strategy this year in 2023. After all, we still have about, 7 months, 8 months left in the year. This means that if you want to capitalize on the Augusta Rule, then you should start renting out your home to your business as soon as possible and start establishing what you are going to rent out your home for. What is going to be the business purpose? Are you going to conduct meetings? Are you going to put on a conference? Are you going to put on an event? You need to start figuring this out now and start getting it documented. Don't put it off because time is running against you. You're focused on making income. The last thing that you're typically focused on is how do I avoid taxes? This is one you don't want to wait on. You've never rented out your home ever before to a business, then this might be the first time that you decide to do this. And part of the reason why we consult on this is because we don't want you to make a mistake. The main thing that you need to do is to make sure that there is a legitimate business purpose that justifies the rental. For example, consider scheduling seminars, consider scheduling workshops or other types of meetings that you're paying to go to that you can conduct at home. And secondly, create the rental agreement that goes over things like the price, that goes over the duration of the rental. And most importantly, make copies of the rental agreement and distribute them to yourself and any other business associates that are a part of your business. This process, guys, is very straightforward. You should be able to complete it very easily and follow my instructions just by watching this video. Here's some of the things that I don't want you to forget about. I do not want you to forget about keeping business minutes. I know some people are just going to glaze over this entire part, but sometimes the IRS does audits. And when they audit people who try to take advantage of the Augusta Rule, especially if they're using it to rent out their home to their business, and for this reason, it is very important for you to keep minutes for the meetings that occur at your house. This is one of the number one things that auditors look for. This doesn't mean that you have to write literally everything down that everyone says in the meeting or every minute. Instead, it just means that you should have someone take notes of the main points of what's happening at the event or meeting that you're hosting. Having a record of the meeting minutes is a great way to protect yourself from having a negative result happening in an IRS audit, which I have experienced with other taxpayers. I've seen other taxpayers who have done this strategy incorrectly, and the IRS is looking for meeting minutes and we don't have them. So this is why I want to make sure that you're protected. Now, here's the other thing that I know that the IRS looks for after speaking with IRS auditors. IRS auditors also want to see that you created an invoice. So what I teach my clients to do is create an invoice between yourself and the company. Just as you should take minutes, if you decide to use the Augusta Rule for your business, you should also make sure that you create the invoice. The reason why you should create an invoice is to make sure that you will be able to deduct the expense and prove that the expense actually occurred in case the IRS comes knocking. When you create the invoice, it should include all of the charges that were associated with renting your home to your business. You do not necessarily need to make the invoice super fancy. It could technically be as informal as an email, but feel free to use invoicing software. If you have QuickBooks or Stripe. Use some type of invoicing software to generate your invoices if you would like a more professional invoice. High quality invoices can be very useful in the event of an IRS audit. After all, the purpose of an IRS audit is just to make sure that everything is done legitimate. Why don't we use legitimate software and create legitimate invoices? So if your invoices look highly professional and high quality, then this can help make for a great impression with the auditor from the IRS. Now, the last thing I want to ask you guys is, are you allowed to use rental sites like Airbnbs to leverage this strategy, or a secondary home? Some people think that they are not allowed to use rental sites like Airbnb, VRB, or others to rent out their properties for this Augusta rule. However, this isn't true. The IRS fully allows you to rent out your property on these sites in order to take advantage of the Augusta rule. Using rental sites can also be helpful in other ways. For example, it helps to strengthen your paper trail and provide further proof that the rental activity took place. And in addition to that, some rental sites help with liability, and many of them also track comparable prices. All of these things can be highly beneficial for you as you try to rent out your home to take advantage of the Augusta rule. Also, renting your property out through sites like these, probably significantly easier and more convenient than using like more traditional methods such as like word of mouth or newspaper ads. However, after you rent out for a maximum of 14 days, don't be tempted to continue renting it out if you want to still qualify for the Augusta rule. That's past, it's 14 days. If you decide while you're renting out your property that you want to keep doing this on an ongoing basis as a side hustle, you can truly become a real estate investor. But you will not be able to use the Augusta rule as a tax loophole anymore to receive the tax burden that I'm talking about. You will have to pay standard tax rates on your rental income if you rent out your property for more than 14 days, hence the term, the 14-day rule. Now, we are at the end of this video now, and there's always something that I have at every video that I want to make sure you stay to the end to learn. The golden nugget for the Augusta rule is to always make sure that you issue a 1099 to yourself if you have an LLC and are going to use the Augusta rule to claim the deduction. You need to make sure that you actually 1099 yourself. Do you have to pay taxes on the rental income? No. You just want to make sure that you're documenting everything correctly. If you are doing this strategy, then a 1099 should be issued to yourself. This definitely includes people you rent property from too. If you're 1099ing other people, that means that they're paying you for a service that's over $600, correct? I just want to make sure you're getting into the habit of utilizing the 1099 form correctly. Now, this is just part of the process, and it's something you should accept and get used to if you plan on using this rule over and over and over again, because you're converting non-taxable income to get a business deduction. But here's something that I want you to understand about my thoughts as it pertains to the Augusta rule. I personally think that this Augusta rule strategy is literally one of the best tax loopholes in the United States tax code. So if you have the extra space in your residence, or if you don't mind renting out your home to your business for a few days, then this is an excellent way to get non-taxable income and a great deduction at the same time. Some people hesitate to do the Augusta rule because they have never done it before, or their CPA has never leveraged it before. I do not want you to be intimidated by this strategy. If you fall into this category where you're a business owner, you're a homeowner, then feel free to get in touch with my company by clicking the link in the description below. We can walk you through the Augusta rule strategy. I mean, we leverage this one all the time. You can also find a link to my course, Tax Alchemy, in the description. In this course, I teach you advanced tax strategies leveraged by the top 1% to minimize tax obligations in order to keep more of your hard-earned money in your pocket and not in Uncle Sam's. Finally, I want to remind you guys about the Tax-Free Wealth Challenge that I'm running this upcoming June. If you haven't been a part of the Tax-Free Wealth Challenge, you are truly missing out. It's pretty much 5 days where I'm teaching you all of the most advanced tax strategies that I have. This event has been one that I've truly prided myself on going the extra mile to make sure that I deliver all of the most advanced tax strategies that I know. So be sure to sign up and click on the links below to get a part of the Tax-Free Wealth Challenge. Thank you guys so much for making it all the way to the end of this video. I always like doing these videos because I get to explain strategies in depth. But if you would like to go deeper, I encourage you to click on the links below to work with my team. We'd be happy to sit on a phone call and determine what strategies you're currently leveraging or not leveraging to pay the least amount of taxes possible. All right, guys, that's it for today's video. Thank you for your time. I'll see you guys on the next one. Cheers.